Hello, everyone. Welcome back to our channel. Today, we have an exciting video for all you book lovers out there. We'll be diving into the bestseller, The Psychology of Money by Morgan Housel. If you're interested in understanding how our mindset influences our financial decisions, then this book is a must-read. In this summary, we'll cover the key insights and takeaways from this fascinating book. So, let's get started.
The Psychology of Money begins by exploring the core principles of money management. The author emphasizes that wealth is not solely about the numbers, it's about our behavior and attitudes toward money. Housel introduces the idea that personal finance is more like personal behavior than mathematics. The meaning of wealth. The book delves into the different meanings of wealth and how it varies for individuals. True wealth isn't just about how much money you have but about having enough to live a fulfilling life. The role of luck. Housel emphasizes the role of luck in financial success. Many successful individuals often underestimate the influence of luck on their achievements. The power of compounding. Understanding the magic of compound interest and how it can work in our favor over time. Moving on to part 2. The book explores various behavioral biases that affect our financial decision-making. Loss aversion. People tend to fear losses more than they value gains, which can lead to irrational decisions. Mental accounting. How we tend to categorize our money into different mental accounts and make inconsistent choices as a result. Anchoring effect. The tendency to rely too heavily on the first piece of information encountered when making decisions. Herding behavior. The influence of others on our decisions, often leading to following the crowd rather than independent thinking. Part 3 focuses on practical approaches to building wealth and achieving financial freedom. Saving and investing. The importance of consistent saving and smart investing strategies for long-term growth. Avoiding debt traps. Understanding the potential dangers of debt and how to manage it responsibly. Timeless investing principles. Exploring the time-tested principles of successful investors and how to apply them. The final part of the book shares valuable stories and lessons from real-life individuals who have achieved financial success through their unique approaches. Learning from others. The book presents case studies of famous investors and their successes and failures, offering valuable lessons. The importance of flexibility. How being flexible and adaptable can lead to better financial outcomes. Defining your goals. Understanding the significance of setting clear financial goals and aligning your actions accordingly. Welcome back, everyone. Since we've covered the main points from The Psychology of Money, it's time for some Q&A and a deeper discussion of the book's themes. Our first question comes from a viewer, Emily, who asks, how can I overcome my fear of investing and start building wealth?
That's a great question, Emily. Overcoming the fear of investing is a common challenge for many people. The key is to start with education and understanding. By learning about different investment options, the power of compounding and diversification, you'll gain more confidence. Additionally, consider starting small with a portion of your savings, and gradually increase your investments as you become more comfortable. Remember, investing is a long-term game, and it's essential to stay focused on your goals.
Excellent advice, co-host. Our next question is from Mark, who asks, how can I avoid making impulsive financial decisions?
Impulsive decisions can be detrimental to your financial well-being, Mark. One effective strategy is to introduce a waiting period before making any significant financial choices. Sleep on it or take a day or two to think it over. This will help you avoid making decisions based on emotions or short-term impulses. Additionally, having a clear financial plan in place and seeking advice from a financial advisor can provide you with a rational framework for making informed decisions.
Wise words, co-host. Let's move on to our deep dive discussion. The Psychology of Money talks about the influence of behavioral biases on financial decisions. Co-host, could you share an example of how a behavioral bias can impact someone's investment choices?
Certainly, H. One common bias is the herding behavior we mentioned earlier. Imagine a situation where the stock market is experiencing high volatility, and many investors start panic selling their shares. Herding behavior might lead someone to follow the crowd and also sell their stocks, even if it's not the best decision for their long-term goals. This impulse to act in unison with others can sometimes lead to significant losses or missed opportunities.
Absolutely, co-host. It's essential to recognize these biases and develop strategies to counteract them. To conclude our discussion, let's share some actionable tips from the book that viewers can apply to their financial lives.
Of course, H. Here are some practical tips from The Psychology of Money. 1. Focus on the long term. Avoid reacting to short-term market fluctuations and stay committed to your long-term financial goals. 2. Automate savings. Set up automatic transfers to your savings and investment accounts to ensure consistent contributions. 3. Diversify investments. Spread your investments across different assets to reduce risk and improve potential returns. 4. Stay educated. Continuously educate yourself about personal finance and investment strategies to make informed choices. 5. Embrace failure. Understand that financial setbacks are part 5 of the journey, and use them as learning opportunities to improve. Those are fantastic tips, co-host. Remember, it's the small, consistent actions that lead to significant financial growth over time.
And that wraps up our summary of The Psychology of Money by Morgan Housel. We hope you enjoyed this overview of the key insights from the book. Remember, money is not just about numbers, but it's deeply intertwined with our behaviors and mindset. If you found this summary helpful, we highly recommend grabbing a copy of the book for an in-depth exploration of the psychology behind money management. As always, thank you for watching, and don't forget to like this video, subscribe to our channel for more book summaries and financial tips, and hit the notification bell, so you never miss an update. Until next time, happy reading and happy investing.